Hi guys, welcome to this Moneycontrol live stream. You're watching Morning Trade with me, Nandita Khemka. It's a Thursday morning and of course lots of cues to watch out for we have obviously achieved a historic feat. We'll be talking about that as well. Stocks in focus, Reliance Industries, and you have Coforge, which is likely to see a block deal today. So lots to talk about, and of course also getting all your stock related queries answered by a technical expert on the show. So if you have any queries, shoot them to us on our YouTube feed and we will have them addressed. But before we go any further, let's take a look at the visuals first of the great feat that India has achieved. In fact, India has kept its date with history, becoming the first nation to land on the south pole of the moon at around 6:04 p.m. last evening. The Chandrayaan-3 touched the lunar surface and subsequently entered the elite club of nations that have landed on the moon. However, no nation has ever successfully landed near the south pole of the lunar surface. So that's one feat that India has achieved. For the next 14 days, which is equivalent to one moon day, the Pragyan rover will send images and data from the surface of the moon, and the data is crucial as it will help scientists learn more about the moon's history and evolution and go a long way in planning future missions as well. Let's also take a look at other headlines then. Wall Street ends higher with Nasdaq clocking a 3-day winning streak. AI chipmaker Nvidia surges in after hours trade after earnings top estimates, and Asian markets, of course, also upbeat given the fact that the GIFT Nifty is hinting at a higher start for the Indian market above that 19,500 mark. And oil prices have dipped. Brent loses up to 2.5%, in fact, ending lower, but recovers some ground to close 1% lower at about $83 a barrel. In fact, gold has gained about 1% to close at a 2-week high. Qatar Investment Authority makes $1 billion bet on Reliance Retail, invests more than 8,200 crore rupees, valuing Reliance Retail at about $100 billion. And stocks in the spotlight today. Defense stocks will continue to hog the limelight as they aim for the moon. Coforge too will be in focus as promoters may exit stake via block deal, and of course we'll also be talking about Reliance Industries that will be in focus after Qatar Investment Authority invested or plans to invest 8,200 crore rupees in Reliance Retail. But let me first bring on board, our first guest for today, Amit Kumar Gupta, who's the founder and CIO at Fintrekk Capital, to talk about defense stocks that have been high-flying in trade. And of course, most of them or some of them have contributed to the Chandrayaan mission as well by, supplying parts and components and solutions for Chandrayaan-3 as well. So, hi, good morning, Amit. Great to have you on the show. Well, India has achieved a historic feat yesterday, and, we saw defense stocks aiming for the moon as well in trade yesterday. Now, some of these companies like L&T, BEL, Astra Microwave, they have all provided components, and yesterday there was an interesting tweet from market veteran, and I want to bring it on the screen as well. Sunil Singhania, who said that total cost of making Chandrayaan-3 is about 615 crore rupees, and the combined market cap of these companies supplying parts to Chandrayaan-3 was up by a whopping 50,000 crore rupees. So would you say that there is a fair bit of euphoria building in when it comes to some of these defense names?
Yeah, hi, good morning, Nandita. Thank you for having me. Yes, it's a very proud moment for every citizen, given what has happened with Chandrayaan yesterday. As far as I think the defense stocks are concerned, in the past 18 months or so, there has been a very strong strategic need to indigenize the defense, because a lot of our defense was Russia dependent, and then the war broke out, and we had to de-risk from that strategic perspective. I think we had to increase the defense spending, and that's why so many orders have been given to these companies, and obviously the Chandrayaan thing has been a bonus for a lot of the defense companies. There is a rush to book the capacities. They are getting good orders, good advances, and I think in short term market can be euphoric. Given the strong run-up which we had over the past 12 months or so. But I believe this is a long-term story for the next 4 or 5 years, given that there is a very firm demand for these companies. We just need to be, a little bit sure about the valuations which we are paying while investing in these stocks.
Right, so interesting point you made about the valuations. Now, market participants do fear that defense stocks are likely to have entered into overbought territory given the kind of rally that we've seen. And the past rallies, essentially were the result of availability of defense companies at deep discounts. But now that comfort may be missing, Amit. Which stocks would you say offer valuation comfort at the current juncture after the kind of run-up some of these stocks have seen?
So yeah, there were two issues with the defense companies, 18 to 24 months ago when they were available at a very deep discount. One was that there was a lumpiness to the business. So where will you get your next order? And second was when will you get your payment? The working capital used to be very long. It's still very long for for a lot of companies, more than 1.5, 2 years. So I think these two problems have been resolved by the government. They're getting advances, and the pressure on the working capital is not so much. What we are doing is in our strategies is that we are looking to invest into the companies which are looking to de-risk their business. So there are a few companies where their primary business was not defense, but they have made a very strong entry into the defense vertical, which can de-risk their business. So, for example, one of the stocks which we have recently recommended is Bharat Forge. Now, Bharat Forge has been historically into internal combustion engines, and with the rise of EV now, they have to de-risk their business. And in that perspective, the Bharat Forge is very important. Because now their defense vertical has become very attractive. They are getting orders actually in that, and 50% of that will be done, manufacturing will be done locally for the international orders as well. So my sense is that, these kind of companies like Bharat Forge, which are de-risking their business, which are setting up their new verticals, we like to invest, and as a disclosure, we have recommended it to our clients as well.
All right. I also want to get in your thoughts on two stocks. HAL, we have a query on our feed coming in, so I thought I'll ask you about it. HAL and L&T. L&T, of course, we have seen big order wins coming in over the past few days. Yesterday, in the UAE region, it had bagged orders for somewhere around 2,500 to 5,000 crore rupees. And then a couple of days ago, we saw a 2,500 crore order coming in from Australia, a fertilizer unit there. So your thoughts on these two stocks, L&T and HAL?
Yeah, see, it's quite difficult in terms of how lumpy HAL business is. Obviously, in the case of HAL, the Tejas program is extremely important. Now, if they get incremental large orders on Tejas and they continue to keep that, then one can see a very sharp, sustained up move in the revenues. So from, I think, a longer term perspective, one could still, sort of justify those multiples. But on the flip side, any kind of weakness happening on the Tejas platform and the whole story, then go for a toss. So I think one needs to be a little bit careful how much they want to pay for the current valuations or the future valuations in that. So I would be sort of not a fresh buyer of HAL at these levels, but I'll probably wait for a little bit of more time correction and price correction before I put a fresh position into it. What was the other stock?
L&T.
Yeah, L&T has again started getting a little bit of a defense order. I think it's a very small pie of revenues for them. Their main business still stays infra and construction, and obviously they are they'll get the benefit of the merger which has happened last year from their IT verticals. So I mean, technically, L&T actually looks very good. The order book is good. They're facing a little bit issue in the manpower crunch. They've recently made a comment at 35 to 40,000 short of the manpower. I think these are temporary issues, but the order books with the whole business and with respect to defense business, they are looking pretty solid.
All right, that's the view on defense stocks. And with that, Amit, thanks a lot for taking out time and joining in and sharing your thoughts on the defense space with us.
Thank you.
Well, with that, let's also shift focus and get on board our technical expert for today. Joining us is Kush Bohra, who's the founder of kushbohra.com. Good morning, Kush. Great to have you on the show. Chandrayaan-3, of course, has been lucky for the markets, given the fact that yesterday we ended at the high point of the day, and today SGX, in fact, GIFT Nifty rather, is hinting at a start above that 19,500 mark. And Bank Nifty, of course, also took off in yesterday's session. So would you say that, the takeoff that we saw yesterday will only gather momentum today for both Nifty and Bank Nifty?
Hi, good morning. First up, thank you for having me on the show. Well, the way I see it, it's, the rover landing on the moon, but the market's just about to take off. That's the view in the near term. But yeah, if I have to talk specifically about, a day or two, let's not forget that, markets have been in a range. The range for Nifty has been 19,250 to 19,550 for, Bank Nifty. It's been somewhere close to, 44, 700 to about 43,800 kind of levels. While I am optimistic, about the markets taking off from here, I will also suggest a word of caution because we are at, we're very close to the upper end of the range. Once this range is taken out, can we safely say that the near term direction has changed and the consolidation is done, and we are on the move, on the upside? But I will just be a little cautious here. My bias will remain positive, but until 550 on Nifty is taken out and 44,700 on the Bank Nifty is taken out, I will be a little cautious. I will have a long position if I'm carrying long positions from yesterday. I will look to book profits here, lest we see any kind of profit booking and Nifty again, falling back, within this band. So I'll be a little cautiously optimistic. Incidentally, 19,550 and 44,700 happen to be the levels where both the indices have the 20-day moving average as well. So from a technical standpoint, once these levels are taken out, can we safely say that this consolidation is over? Up until then, as I said, cautiously optimistic.
Cautiously optimistic, that's the view on the markets then. But before I move on to queries and some other stocks, I want to talk about Coforge in particular, given the fact that there is likely to be a block deal, a large block deal in the counter. Promoters bearing PE Asia looking to sell 26.5% stake and exit the stake itself. And, the floor price has been set at 4,550 rupees per share, which is at a discount to current market price of 350 rupees or thereabouts. If you look at the stock, Kush, I think last 1 month it hasn't really done all that good, even though it has given positive returns. It's just about up somewhere around 4% or thereabouts. But do you see some bit of the downtick that we've seen of late to continue going forward for Coforge?
It could. It very well could. My view on the entire IT pack is, it's a buy on dips kind of a setup right now on most of the stocks, be it large cap or the mid caps as well. Barring a few names, most of them have a very strong buy on dips kind of setup. However, on Coforge, that view, remains, but that is up until yesterday. Today, if we, do touch that, 4,500, 4,600 kind of level, it could probably, disturb the structure a little bit, probably, might take some time to rebound from there. Because for the last 4 to 5 months, for the better part of those months, the stock has not even breached its 20-day moving average on a consistent basis. Now, if that were to happen today, 4,500, 4,600 is the level that we were to see. It would be very close to its support zones, but then from there the rebound could probably be a little sluggish. So if you're a medium to long term kind of an investor, this might turn out to be a buying opportunity because this is the exact support zone that the stock has, 45 to 4,600 kind of zones. But if you're a trader, I would suggest wait out. Even if you want to dabble in the IT space, there are plenty of other names which look relatively stronger. So I would suggest let the stock settle down. Probably give it a day or two. Monday is when we look at it again as to where it settles and what direction it's taking.
All right, that's the view on Coforge then. But I want to get in your thoughts on a Paytm. It has rallied quite a bit. Yesterday it was up almost 7%, and over the last 5 sessions it has clocked in a healthy rally as well. And this morning we have a very positive view, brokerage view coming in on the stock. Bernstein has in fact initiated coverage on the stock with an outperform rating and sees a target price of 1,100 per share. And it says that the early signs of edge in digital lending is achieved by leveraging digital payments platform. It expects business to break even by somewhere around FY25 and generate EPS of somewhere around 130 rupees by FY30. Very close to 1,000 levels now. Yesterday it hit a fresh 52-week high as well. Next couple of weeks, could we see those 1,000 levels on Paytm?
Why just Paytm? I would suggest look at the entire pack. The entire new age stocks, so-called, have been doing rather well. The kind of recoveries that we've seen in them has actually restored a bit of investor confidence. Although some of these remain off way off the listing levels, but the kind of recovery that we've seen, it at least puts in the faith that these could be considered from a medium term perspective as well. Even for a trader, these are stocks that you would now want to put on your radar because the volatility seems to have stemmed and the downside, is now probably a little restricted. Take Zomato, take Policy Bazaar, as another cases in point. So all of them have actually gained traction. They will perhaps continue to do well. If I talk specifically about Paytm, very encouraging move yesterday. 900 was a key resistance zone that the stock has not been able to take out since June. The kind of levels that we saw, the kind of run up that we saw, 900 is where it stopped. Now, yesterday we saw a closing above it. There was a very clear uptick in volumes as well. So yeah, 1000 is not a level that I will rule out. Maybe not as early as next week, but yeah, in the coming month or so, perhaps that's the level that the stock could retest. And also, while we're on the subject, as I said, Zomato is one other stock that I would have on my radar for targets of 100 and even 110 for the coming months.
All right, Zomato, Paytm, of course, looking attractive on the charts now. But, let's take up some queries that have been trickling in on our live feed. Lots of queries on the defense pocket. We, of course, had Amit talking about the likes of L&T, BH, Bharat Forge. But, we are getting queries on, MTAR Tech, BEL, Astra Micro. Anything that you are spotting on the charts that's looking more attractive to you with respect to upside, because we have seen a fair bit of upside in some of these stocks. We have queries coming in from Prasanna, from Raj Arun, who wants to know specifically about Astra Micro. So people holding on to these counters, should they wait it out for more rally to come in before booking profits?
Yeah, do I hear a certain caution in your voice because these stocks have done rather too well? No, but it's understandable. Most of these stocks have run up phenomenally. But as I was listening to Amit, the guest, just prior, this rally is here to stay. No one believed that these stocks would perform the way they have maybe 2.5 years ago when the rally started. And the kind of traction that we are seeing in almost all of them, and almost all of these are taking turns. First you've got the likes of HAL, then the most of the shipbuilding stocks. So some of these stocks have actually still got a long way to go. Even from a technical standpoint, I would suggest that if you have existing positions, the best way to play them would be trailing stop losses. Don't be in a hurry to book profits because any kind of new fresh trigger would perhaps give more momentum to these stocks, and you might miss out on a very healthy move. So the best way would be to play these stocks via a trailing stop loss, assuming you've bought them at lower levels. If I have to speak specifically about Astra Micro, again, very sharp up move, in the last couple of days. The stock had actually given way. 385 was the zone where it tested, for a while, and then it just, fell. On the way up, I think 385 is a level where the stock will, come to in the coming days. But that's where you should partially book your profits. If you've got it from lower levels of 340, 350, where the stock fell, book it 50%. Once this level is taken out, I won't be surprised that you see 410 kind of levels also coming on this one. So Astra Micro overall setup is turning positive. Book partially at 385 and hold the rest for 410. The other stock that I have on my radar, and I've been recommending as a part of my advisory service as well, is Bharat Forge. Again, stupendous run, but the good thing is that we are seeing the stock move higher day after day. And it's on the back of increasing volumes. So every day the volumes have also been going higher. So I would hold this for a target of 1080 and 1120. And for a fresh entry, my stop loss would be somewhere close to 990.
All right, that's the view on the defense pack coming in from Kush. But Kush, I want to get in a query on Trent. This one is coming in. I think I've lost the feed here. But Hemant wants to know your thoughts on Trent. Trent, of course, has been, on an upward trajectory. The stock has hit a fresh 52-week high yesterday. Hemant particularly wants to know if this is the right time to book partial profits and perhaps rotate the amount to paper stock like Andhra Paper. What would you advise him to do?
It's a very specific query, with the answer built in the query itself, and it's a brilliant strategy to play. As I was suggesting for defense stocks, the same thing applies for Trent. If you look at about 10, 15 odd sessions ago, the stock was languishing at about 1680, 1650 kind of levels. From there, it's seen almost 20% kind of returns on this, already in the last 10, 15 sessions. So the move's pretty sharp. The stock's already entered into, an overbought territory. You can very clearly see the volumes waning off. So it'll not be a bad idea to, yes, book some, profits partially at current levels, hold the rest with a trailing stop loss of 1980. Once that is taken out, the stock could fall to 1900 levels as well. So yeah, I mean, book some profits right now, hold the rest with a trailing stop loss of 1980. Trent, excellent buy, and congratulations to the gentleman for holding on to this. Book it partially. As far as the other query, Andhra paper goes, well, the stock isn't really as encouraging just yet, although it's just recently breached its 200-day moving average and trading higher, but very close to it and has not given a convincing breakout. So I would suggest hold on to it. There are a couple of other stocks that in fact we've discussed just a while ago, that the gentleman can look into, the likes of Bharat Forge. So yeah, Andhra paper, not very encouraging setup just yet.
All right, that's the view. Congratulations on Trent, but not very encouraging when it comes to Andhra paper. But let's also take up a query on Trident. Couple of queries coming in on this particular stock from Manish as well as Rakesh. Stock has been on an upward trajectory as well, but yesterday I think it came under a fair bit of selling pressure. But would you advise investors to get into the stock on dips now?
Well, not really. What I would suggest is if anyone's got an existing position, then hold on to this one with a trailing stop loss of 35.50. And I'll tell you why. It's been consolidating, and the band was 35.50 to about 32.50, for the good part of last 3 months. We saw a sudden upsurge. I'm guessing there is perhaps a news in this, and hence the volume backed up move, but that seems to be giving way now. So I wouldn't suggest a fresh entry into it, because the stock's already gone into a bit of a profit booking mode, and the impact might perhaps be waning a little bit. So existing positions, hold on with a trailing stop loss of 35.50, but fresh entry, I would suggest hold for now. If the stock does cross above 38, that's when you will see a new momentum, a new trend setting in. But up until then, I would suggest only for existing holders, existing position holders, to be in it for trailing with a trailing stop loss of 35.50.
All right, that's the view on Trident. I think we have time for just about one more query. This one is coming in from Vivek Kurup. Wants to know your thoughts on a Vasco Engineering. He particularly wants to know whether it's a good time to enter into the stock today and maybe hold on for a couple of weeks. Would you advise him to do that?
I like the time horizon. Most certainly, the stock's actually been in a very, consistent secular kind of an uptrend. We've seen a volume pick up as well. So yeah, not a bad idea. Plus, the entire space is actually, picking up traction all over again. So yeah, I wouldn't mind, saying that, enter right now, but save some money for dips as well, because for the last 2 days, 61 is a level where the stock has actually resisted. So I would suggest, buy partially. There is a possibility that the stock could dip to about, 58 kind of levels. Enter, at those levels again. 65 and 69 are the two targets that I have on this one for coming weeks, and my stop loss would be placed strictly at about 55 levels.
Right. Very quickly, any thoughts on a stock called Camlin Fine? We're getting a query from Sarangi and wants to know your thoughts. This stock has been fairly volatile, Kush, but over the last 6 months or so, it has rallied somewhere around 10% or 11% or thereabouts. Anything that you would advise investors to do with this stock?
Exit, Camlin Fine Sciences. I'm assuming this is the one that, that's trading at 154 kind of levels. My suggestion would be exit. The stock's been in a near-term downtrend and, just recently broken below its, long-term support zones as well. So fairly, clear exit on this, as painful as it might sound, but yeah, it very discouraging kind of a setup. So Camlin finds an exit from my end.
All right, exit Camlin Fine. Hope that answers your query. With that, we've come to the end of the query segment. But before I ask you about your stock picks, what's your thought on Reliance Industries? Given the fact that, we've had this bit of news flow that, Qatar Investment Authority is looking to invest somewhere around, 8,200 crore rupees in its retail arm. We just saw Geo Financial also list on the exchanges. So on the on Reliance Industries particularly, where do you expect the stock to head from here?
My view on Reliance for a while now, for a few months now, has been very clear. As long as the stock holds 2,400, 2,450 kind of levels, keep accumulating this one. There will be these bouts of news that will keep coming in, pushing the stock higher. Even though it's trading in a range right now, if you have anywhere from a medium to a long-term kind of a perspective, keep accumulating Reliance Industries. I will not be surprised to see 2650 and 2750 kind of levels on this one in the coming months. So fairly positive on Reliance. As far as 2400 and 2450, the support zone is held.
All right, that's the view of Reliance. But before I let you go, Kush, any stock recommendations for our viewers this morning?
Sure, two of them. One is Hindalco. We've seen some traction in metal pack, a very smart recovery after the kind of dip that we'd seen after the news came out from China. But the packs actually revived rather well. Hindalco, being the leader, is expected to continue doing well. 470, 480 are our targets. 450 is where I would place my stop loss. My second pick is Engineers India. Very steady run. Any kind of dip has been bought into. This momentum could continue. From a trading perspective, 169 and 175 are the targets that I would place. 159 is where I would place my stop loss. And as a disclaimer, these are the stocks that we've shared with our clients as well as a part of our advisory service.
All right, those were the stock recommendations coming in from Kush. With that, Kush, thanks a lot for taking out time and joining in and sharing your thoughts and, of course, answering all of your queries as well. Look forward to more such chats with you. Well, with that, we've come to the end of this edition of Morning Trade. From the entire team, thanks a lot for watching, but don't go anywhere because coming up next is Opening Bell.
How do world leaders view India?
I've long believed that the relationship between the United States and India is will be one of the defining relationships of the 21st century.
The bright spot of the global economy.
The growth rate for India, which is 6.8 in 2022. Let's not forget, this is one of the bright spots in the global economy right now, such a high growth rate.
The potential of India is enormous, and you have now a reformer, a radical reformer, who has the ability to transform it.
On the verge of a big transformation.
इस अमृत काल में हमारे संकल्पों की सिद्धि हमें आजादी के 100 वर्ष तक ले जाएगी.
A magnet for investment.
I'm actually incredibly excited about the future of India. I think India has more promise than any large country in the world.
The world is bullish on India. Moneycontrol is bullish on India. Join the campaign. Tweet to us with #MC Bullish on India.